Okay, so lesson 14, the non-farm payrolls. Now, the non-farm payrolls presents the number of people on the payrolls of all non-agricultural businesses. The non-farm payrolls represents the total number of paid U.S. workers of any business, excluding general government employees, private household employees, employees of non-profit organizations, and farm employees. Okay? Now, as the non-farm payrolls number grows, it means jobs are being created. Hence, more people having jobs. More jobs mean more people spending money, which results in economic growth. Now, low unemployment also results in increased inflation. And this is because when unemployment is low, there is a shortage of labor available for businesses to hire. So, as businesses compete with one another for the available supply of labor, they raise the wages they are willing to pay. Now, because higher labor costs eat into profit margins, they raise the prices of their products. So they raise the prices to combat the higher labor costs. Now, although high employment means there are more consumers that have money to inject into the economy, this increase is soon erased by higher prices. Now, because of the increased prices, which is as a result of increased inflation, this results in a decline in purchasing power. Now, there are at least two related problems. If wage rates gets too high, businesses will respond by hiring fewer workers and unemployment will go up. Now, businesses could raise prices to counter the increased labor costs, but if they charge higher prices, they won't be able to sell as much of their products. And this is because higher prices will result in a decrease in demand because less consumers will be willing to pay higher prices. Now, because of reduced sales, they will cut back on hiring, and once again, unemployment will go up. So the only way the government can prevent this problem is by increasing interest rate. Now, what if the government tries to correct the situation by lowering interest rates or by injecting more money into the economy, say by cutting taxes or spending more money? Prices in general may go up, and this is because more money being pumped into the economy would result in more persons having money, which would result in increased consumer demand, and increased consumer demand would result in increased prices. And again, purchasing power will decline and inflation will increase. So the only way to combat the increase in inflation caused by low unemployment is to raise interest rate. So this is one of the main reasons why the non-farm payrolls is so important. This announcement comes out the first Friday in every month, and every month there are a lot of traders that wait on the non-farm payrolls results to trade, because a lot of persons actually predict the outcome of non-farm payrolls with precision based on the weekly jobless claims, the ADP reports, the PMI. So persons use these data to give them a good estimation of what to expect for the non-farm payrolls. Okay, so in the next lecture we'll be looking at balance of trade.